സ്റ്റാർട്ട് സ്റ്റോപ്പ് അങ്ങനെ ഇരുന്ന് പറഞ്ഞല്ലേ സാർ? ഓ ഓക്കെ ഓക്കെ, ശരി ശരി. ആ ശരി. ഓക്കെ. Hello everyone. Today we are going to discuss a few words that are very important when you are solving the questions. Those words to say, one is or few terms, okay, instead of words we'll use the word terms, okay, very important for when it comes to first chapter of accounting. So that is partnership fundamentals. So what are those words? Okay, so and when are these words important or when are these terms important? First word that I will say or I would like to say is opening capital. So you must be wondering what is special about this word, right? Opening capital. So when it comes to board perspective, see, this word becomes relevant when it comes to the calculation of interest on capital. Interest on capital. So we are just discussing some random terms, and then we will slowly go to a main topic, which may or may not include the terms which we discussed so far. So we are not doing any kind of sums today. We are discussing all these terms, or what are the things that you have to note while doing calculations from these topics or these terms. So how are these terms very important? So most of the sums that you come across while doing or while from the first chapter, when you are coming across the sums related to appropriation account preparation or related to past adjustments, they may use the word directly or indirectly. They may use or they may tell about capital either at the end of the year or at the beginning of the year. So when the capital is mentioned with the date that is related to the end of the year, this can be called as closing capital. This can be called as closing capital. Similarly, when it comes to the beginning of the year, this much though, like everyone will be knowing it by now, right? So opening capital means capital at the beginning of the year. Closing capital means capital at the end of the year. Okay, so here opening capital, what is the relevance of this concept of opening capital is, as you can see here, when it comes to the calculation of interest on capital is always calculated on the opening capital. It need not be capital at the beginning of the year. Sometimes partnership may start at the middle of the year also. So some questions are, you must have already come across some certain questions where business is starting from the middle of the year. So if that happens, then from that particular date on which business starts, that date is called beginning of the year for that particular year. Initially, say for example, one business is starting on October 1, 2024. Usually our year starts on April 1. We are all familiar with the dates. So April 1, if the business starts, obviously on that April 1, what is the capital contribution or what is the capital contributed by the partners, or it must be an ongoing business for many years. So over the years, we must have prepared the capital accounts, and we must have reached, so we must have been preparing the capital account for the past 3 or 4 years. So right now, when you are checking the beginning of the year, what is the capital, amount of capital, that is called opening capital. Similarly, when it comes to October 1, suppose today only you and your two of your other friends together you are starting a business, then today what is the capital that is contributed by you forms as opening capital or initial investment. You can call it like initial investment. This opening capital is the base for or calculating interest on capital. So most of the time we will find it difficult to identify whether the capital given in the question is opening or closing. So if nothing is mentioned in the question and no dates and all, if it is mentioned in the question, then you can take it as opening capital. Okay, if the dates are particularly mentioned, you give relevance to the date. Okay, that means if capitals of the partners, this much only is given, and the capitals of the partners are mentioned in amounts, then it can be taken as the opening capital generally. Similarly, capital at the end of the year, if it is given, it can be taken as the closing capital. Why we are discussing this concept when it comes to interest on capital is, sometimes closing capital will be given and you may be asked to calculate the interest on capital. So closing capital may be given and you may be asked to calculate the interest on capital. So when it comes to that kind of cases, you have to find out the opening capital beforehand. So there are certain situations, sometimes closing capital will be same like opening capital also. Closing capital and opening capital will be same also. Okay. So we are not talking, so when I use this statement, closing capital is equal to opening capital, some of you at least, okay, some of you must be thinking like this year's closing capital will be next year's opening capital. In that sense I am speaking, that is what you must be thinking now. I am not talking in that sense. Sometimes the same value with which we started the business, or with same capital with which we started the year, will be carried forward towards the end of the year. That means without any changes, the end of the year also will be having the same amount of capital. How is that possible? Of course, you guessed it right. There are certain situations where capital accounts are prepared using a method called fixed capital method. Fixed capital method. So what do you mean by fixed capital method? There are two methods to maintain the capital account of a partner or of partners. So fixed capital method or fluctuating capital method. Generally in all, throughout all these main chapters, admission, retirement, death, in all these chapters the capital accounts are maintained using, most of the questions that you have come across are using fluctuating capital method. So fixed capital method is mostly related to the first chapter of your syllabus. So mostly in first chapter only you will be preparing capital account. Most of the times you will be preparing capital account only in the first chapter based on fixed capital method. Fixed capital method is a method where we, in the capital account of the partner, suppose this is the capital account of a partner, so only I am just mentioning only A as capital account. So if you are maintaining capitals under fixed capital method, obviously the opening capital and closing capital, opening capital is recorded as by balance brought down, closing capital is recorded as to balance carried down. Okay, so this is the meaning of opening and closing. So where you are finding out the balance of the account and writing the capital there, that is called balance carried down, or in other words we can call it as closing capital. When we are starting the capital account and we are writing the amount there, that is called opening capital. In between these two amounts, usually two amounts are possibly recorded in the capital account when you are maintaining capitals under fixed capital method. I will come to all these topics. Okay, now some of you must be getting confused. I have started with the word opening capital. Where is he leading us to, right? So after discussing this point, we will come to the main point again. Why are we discussing all these things? So in the capital account of the partners, now just you understand like this. When you are preparing capital account under fixed capital method, the capital account, okay, whatever capital account you are preparing, it consists of only four amounts. First amount is obviously opening balance, which is denoted by balance brought down, and closing balance. These two are obviously the parts of capital account under fixed capital method. Apart from these two amounts, two more amounts can come in this capital account. One is by bank account, it can be cash account also. This amount is called additional capital. Additional capital means in the middle of the year, if the partners feel like, okay, capital contribution is not sufficient, or because of any other reason, if they plan to contribute a little bit more capital, then that contribution is called additional capital. Additional capital, obviously it is done or it is recorded using the same entry like capital invested by the owner in the business, cash account debit to capital account, or cash account debtor or bank account debtor to capital account. So when we are recording it in capital account, how it will come? By bank account will be coming. Similarly, on the debit side, we will be writing sometimes to bank account. This amount is called drawings against capital. Usually when you come across the word drawings in the questions, the drawings which they are talking about is actually we can withdraw money from two sources in a business. When it comes to partnership, you think like this: there are two sources from which we can take money or withdraw money. One is from the profits, one is from the capital. So from the capital invested also we can withdraw the money. From the profits that is earned by the business also we can withdraw the money. So just by the word drawings, if you come across the word drawings in any part of the question, simply if they say drawings, that drawings is called drawings against profit. That is generally recorded in another account called current account of the partners if you are preparing capital account under fixed capital method. So there are two kinds of drawings: drawings against profit, which is generally simply we will call it as drawings alone, and there is one more drawings, that is drawings against capital. When it comes to drawings against capital, you have to identify it like this: if the partners withdraw any capital from the business, then that is called drawings against capital. So drawings against capital is recorded in capital account under fixed capital method. Drawings against profit will be recorded in current account. Now you analyze these four amounts. I mentioned about this capital account to say one thing: generally when you are maintaining fixed capital, capital is under fixed capital method, these additional capital cases are very rare and capital withdrawn cases are also very rare. So basically to say, majority of the questions that you are doing, okay, majority of the questions that you are doing will be, I'll change the color. Majority of the questions that you are doing will not have these two amounts: bank account, by bank account as well as to bank account. Okay, these two amounts will not be there in your question. So basically the capital with which we started this account will be the capital with which we are ending the account also at the end of the year. That is why I said, when you are maintaining fixed capital method, capital under fixed capital method, now I am going back to the same topic, opening capital and closing capital. So if no additional capital is there, no capital withdrawn is there, generally opening capital and closing capital will be same. So in that kind of questions, opening capital and closing capital will be same, where they mention in the question that fixed capital method is being used. If that is not mentioned, then obviously it means that they are following fluctuating capital method. So how to calculate the opening capital then? How to calculate the opening capital then? For that I would like to bring your attention to certain calculations which are involved in this closing capital and opening capital calculations. Okay, so when it comes to that, as you can see here, suppose this is normal capital account which you all are familiar with. So capital account will begin with opening balance. So by balance brought down will be there. After that, just think about only the first chapter's capital account. Okay, general capital account. So what all things will be there? Sometimes interest on capital will be there. Sometimes divisible profit, profit and loss appropriation account will be there. Sometimes partner's salary will be there. Partner's salary will be there. Sometimes partner's commission will be there. So like this you will be preparing. You must have studied the format of the partner's capital account. I am not going into deep with that concept. Just think like, when you are, what is the purpose or how to calculate the opening capital. So as you can see here, capital account is an account also. Basically it has two sides, debit side as well as the credit side, right? So debit side, the amounts which will reduce the capital will be written, and credit side, the amount which are going to increase the capital will be written. So as you can see here, interest on capital is something that will add to the capital. Again, appropriation account, if it is divisible profit, you know what is divisible profit. But once we prepare the profit and loss appropriation account, once we are done with the appropriation account, the profit which remains there is called divisible profit. The divisible profit will go to the credit side of partner's capital account. Similarly, partner's salary will be there. So partner's salary also will be going to the credit side. So all these things that we are recorded here is added to the opening capital, and there are certain amounts that can reduce the capital. One is obviously drawings. When I say drawings here, it is drawings against profit. So drawings against profit is the normal drawings for which we are calculating the interest on drawings and all. So normally we will write drawings as to drawings account only, right? Similarly, interest on drawings may come. So we will be writing interest on drawings account also here. Finally, so whatever you are writing on the debit side of this account will reduce the capital. Finally, we will find out the difference between the credit side and debit side. Finally, you will get a balance. That balance is called closing capital. So balance is called closing capital. From this closing capital, if you want to reach opening capital, how to reach? Obviously, whatever we have done, we have to reverse it, right? So whatever we have done, we have to reverse it. It means that when it comes to reversing it, first we will start with the closing capital and we will do the opposite of what we have done so far to reach the closing capital. That means here suppose the amount is 50,000 here, and already we have deducted interest on drawings and drawings to reach this amount. So we will reverse it. Deducted means add it back. Similarly, as I mentioned earlier, interest on capital, appropriation account, partner salary, partner's commission, all these amounts are added to the opening capital. So we will reverse it. Reverse it means we will be deducting it. So drawings, interest on drawings will be added back, and whatever we have added already will be deducted. So if you are doing that, you can find out the opening capital. This is the procedure to find out, or this is a process to find out the opening capital from the amount of closing capital. This is how closing and opening calculation happens. So this is the first term for today's discussion, that is opening capital. So opening capital is very important because most of the questions that you come across will be not having opening capital directly. Sometimes you may have to calculate it. So how to calculate it? You have to start with the closing capital, then reverse all the amounts that you have already done. So if you have deducted some amount from the opening capital, you have to reverse it. And similarly, if you have added some amount to the opening capital, opening capital, we have to reverse it. Then only we will reach the first amount. This is the concept behind the opening capital calculation. So that is the first term. Second term that I would like to bring your attention to is the word guarantee of profits. Guarantee of profits. We will come to interest on capital soon, okay, in the upcoming discussions or today's discussion itself. We may discuss about interest on capital again. I will come to that, interest on capital calculations. Today's discussion was actually, my purpose was actually to make you clear with what is closing capital, how to go back to opening capital, and why we need to go back to opening capital calculations and all. Okay, now coming to the next term, guarantee of profits. So what do you mean by guarantee of profits? Some of you must be very smiling and very happy. Some of your favorite topic will be guarantee of profits. So guarantee of profit means what? Suppose A, B, C, there are three partners. C is getting a promise that his share of profit will not be less than 80,000, will not be less than 80,000, okay, in a year. So 80,000 per annum. This is the question, and they will ask, okay, question will be like this: A, B, C were partners. C was given a promise that his share of profit will not go below 80,000, and unfortunately that year the profit was like this. Divide the profit and see whether C is getting the promised profit. If it is not, pass the necessary journal entries. Okay, this is how questions used to be, right? I'm just saying the summary of the question, not the exact question. Okay, so this is how usually questions used to come. So here, what is the relevance of this word guarantee of profit, or why we are discussing this term is sometimes, so in this case which I mentioned just now, I didn't mention who gave the promise, right? I just told like this: C was given a promise that his profit will not go below 80,000 in a year. So that means C is supposed to get 80,000 in a year. By chance, when we divided the profit, when we can divide the profit, after preparing one account only we can divide the profit. Which account is that? Profit and loss appropriation account. So profit and loss appropriation account, after preparing it, when you calculated the divisible profit, the divisible profit is what is called as the minimum profit that should be given to partners, right? So profit and loss appropriation account, whatever profit comes, that is what we are going to distribute to the partners. The distributing, or the profit which is going to be distributed among the partners, is called divisible profit. So here if they say 80,000 per annum is the promised profit, 80,000 per annum should be the divisible profit for C. So suppose when we divided the profit in profit and loss appropriation account, if C is not getting 80,000, he is only getting 70,000, then extra 10,000 is there, that should be given by someone else. So if nothing is mentioned in the question regarding this, then who is supposed to pay it? Obviously the other two partners are supposed to pay it. A and B should be paying the amount to C. Now the problem is, how much A should pay out of 10,000, how much B should pay out of 10,000. So if that is there. That means if normally in the question they may say something deficiency, this amount of 10,000 can be called as deficiency. The deficiency should be paid by the partners in a particular ratio. That ratio we can call it as ratio of deficiency. The ratio of deficiency should be mentioned in the question usually. If ratio of deficiency is not there, you just have to take the partners profit sharing ratio. So here as you can see here 1:1:1. Suppose this was the ratio of profit between A, B and C. So in this case deficiency was 10,000. In the case of A and B going to pay the 10,000 together, in that case what you are supposed to do is you just remove the partner to whom promise was given from this ratio. That means remaining is how much? 1:1. This is the ratio in which they have to contribute. Don't think like always it is 1:1. It depends on the profit sharing ratio that is given there. So suppose if it is 5:3:2, this is one of the confusing topics that students used to, or confusing topics for students when they attempt questions from this guarantee of profits topic. That is why we are discussing this guarantee of profits as the second important topic for today's discussion. So what is the reason? So here what is the reason? Sometimes the ratio in which these people has to pay the amount, that is the amount, this amount can be called as deficiency. This amount how to pay will not be mentioned in the question. In that case, how to share between the partners who gave the promise. So here in the question which I said to you, I didn't mention who gave the promise. So generally most of the question they will not say who gave the promise, only the person who received the promise will be mentioned in the question. That means C is the person who is being guaranteed a minimum profit of 80,000, means C's details will be given in the question, but who gave the promise will be silent. Okay, or the question will be silent regarding the person who gave the promise. So in that kind of cases you have to do, how you have to do, you have to take that remaining two partners, whoever remain, not only two, remaining how many partners, no matter how many partners are remaining, all the partners have to contribute to the person who got the promise if there is deficiency. What do you mean by deficiency? If the profit is, that means actual profit while sharing is less than the promised profit, then you have to bear the amount which is the difference between these two amounts. So that amount is called deficiency. The deficiency should be paid by the other remaining partners in their profit sharing ratio, excluding the ratio of the person who got the promise. So here A, B, C were sharing profits in the ratio of 5:3:2. If that was the case, then we have to just remove C from the ratio. In the ratio of 5:3, they have to contribute how much? 10,000. That is how we have to do this kind of questions. So that is why we are discussing guarantee of profits cases. So this ratio and deficiency is there. Now some of you are still confused, or some students who are trying very hard with this chapter must be confused regarding what if the profit is above 80,000. Possible, right? Some of the questions they may ask you to pass journal entries for, or show the treatment of guarantee of profit. They may ask you to take that, and sometimes when you divide the profit, C may be getting 90,000 itself. What was the profit that we guaranteed to C? 80,000, but C is actually getting 90,000. So is there any deficiency? Don't take that 90,000 minus 80,000 is deficiency. It is not like that. When we are guaranteeing some amount of profit, it means that minimum guaranteed amount is 80,000. If C is getting more than that, then other partners have no problem with that. They can give the 90,000 to C, and other partners doesn't have to pay any extra amount to C, because C is already getting more than what he has been promised. Clear? So that is the next topic that I would like to take. So again, to recall, we have discussed about two concepts. One is opening capital. What is the relevance of this topic? Opening capital means then situations where we have to calculate interest on capital, we need opening capital. Opening capital, it need not be always on April 1. It can be in the middle of the year also, when the questions are related to situations where partners are starting their business on October 1 and all. So that kind of questions also you can expect. So that is one case. Now next is, sometimes closing capital and opening capital will be same. In which kind of situations? In the situations where they are saying that they are following fixed capital method, most of the cases closing capital and opening capital will be same. In which cases it won't be same? Sometimes in fixed capital method itself it won't be same. Okay, which are the situations? If there is any additional capital or if there is any drawings against capital, then the opening capital and closing capital may have or may show some difference. Okay, so we'll have a difference when there is additional capital or when there is drawings against capital. If none of these are there, then obviously opening capital and closing capital will be same. So that is another case, fixed capital method. Next is, so these are the situations. If generally a question is asked to you and they are saying capital on 31st March is suppose A 1 lakh, B 2 lakhs, then generally this capital is obviously closing capital only, and they are not mentioning the word what, fixed capital in the question. So fixed capital is not mentioned means they are maintaining capital according to which method, or based on fluctuating capital method. In fluctuating capital method, closing capital and opening capital will never be same, because all the transactions, you know, capital account, many transactions are coming. Okay, interest on capital, appropriation account, partner salary, partner's commission, all these amounts are recorded in which account? Capital account only. Drawings against profit, interest on drawings, many things are recorded in capital account only. So because of this reason, capital accounts opening balance and closing balance will not be same. In that kind of situations, in order to calculate the opening capital, what are we supposed to do? If closing capital is given, we just see so far what are the things that we already recorded in capital account, and we just have to reverse it. So if we have recorded something on the credit side of capital account, then we have to minus it or deduct it. Similarly, if we have recorded something on the debit side of the capital account, all these are just is imagination, you don't have to prepare capital account and see. Okay, this is just for understanding. I drew the capital account here. Just go through the question and understand what they have done so far. So you know what are the amounts that are coming on the credit side of capital account, what are the amounts that are coming on the debit side. If any of such amounts has been already recorded, they will clearly mention in the question. Interest on capital is already given, interest on drawings is already recorded, salary is already recorded. If they mention like that, then already recorded means you should know which side of the capital account it is already recorded. So we have to reverse it. So if we are reversing it, you will get the amount of opening capital. Next topic that we discussed today was guarantee of profits. Guarantee of profits is nothing, it is some promise that is given by some partners to the other partner that his profit, his share of profit, actual share of profit will be minimum of this much amount. Okay, so in that situation, sometimes question will be silent regarding if that profit is not, or the profit limit is not achieved, okay, by the firm or by the business while sharing the profits, what next, or who is supposed to pay it. So in that situation, if nothing is clear in the question that who is supposed to pay that deficiency, then all the remaining partners other than the person who got the promise should pay the amount. Now the problem is how they have to contribute. How they have to contribute? They have to contribute in the profit sharing ratio after excluding the person who got the promise. Okay, these are the cases that we discussed so far. So I think these two cases are enough for today's discussion. I wish you all the very best for your preparations. We will come up with very important terms and very important calculations in the upcoming sessions also. So once again, all the best for your preparations. Thank you.